Accounting standard setting has reached a special milestone this year, 50 years. It marks half a century in a journey that has transformed financial reporting around the world in response to the need for a global accounting language to aid cross-border trading and investment. In 1973, the accounting profession in several countries came together to create the International Accounting Standards Committee, IASC, with the objective of formulating international accounting standards and encourage their worldwide acceptance. The IASC is the direct predecessor to the International Accounting Standards Board, IASB.
At the inception of the IASC, nobody believes that globally accepted accounting standards could come true. It could be, it's a pipe dream. IASC worked very hard to upgrade the quality of the standards. So people start thinking there's a possibility for the international accounting standards to be a globally accepted accounting standard.
I think one highlight was when IFRS was assigned to become European reporting standards. I think that was a major success in relation to the work I've been involved in at that time for 20 years.
We've arguably come a long way. 50 years ago, there was no global accounting language. Every jurisdiction did things their own way. With the free floating of prices and currencies, as well as the opening up of securities markets, more and more entities sought to get access to capital outside of their home country. And now look where we have come to. IFRS accounting standards have become the legal basis in more than 140 jurisdictions around the globe in less than 20 years. An enormous success.
This globalization journey has taught us a number of key lessons. No country has a monopoly on good ideas. Continual engagement and open exchange of ideas help standard setters develop higher quality as well as more closely aligned standards.
The International Organization of Securities Commission's endorsement of the ISC's core accounting standards in the year 2000 was a key contributor towards jurisdictions requiring the use of IFRS accounting standards today.
The working arrangement between IOSCO, the securities regulators, and the IASC, who had the wisdom back in the mid-'80s to set the objective of transforming IFRS into a financial reporting platform that would serve the global markets. And that was huge. It was transformative. I think it put the ISB onto the path that it still serves today.
You, the national standard setters, have become integral in the adoption of the IFRS accounting standards and supporting the IASB's goal of developing a single set of high-quality, enforceable global financial reporting standards. You are an essential part of the International Financial Reporting Network.
What was this success due to? I think it was international cooperation. It wasn't just FASB and the IASB, it was all the national standard setters chipping in as well.
Time passes fast. It has been half a century. ISB high-quality work has certainly withstood the test of time over the different eras in the past 5 decades.
Standards are supposed to enable businesses to account for their activities in a manner that is true and fair. That means the information they provide is comparable, understandable, relevant, and reliable.
So IFRS 9 was one of the first instances where the IASB at the time was very proactive in terms of engaging with the market to understand how to solve this problem, to understand how credit risk management processes worked and that make sure that the standard reflected that, and also really engaging directly with investors to understand their information needs.
You're actually setting standards for the 90% of people who actually do the right thing, because there's always 10% who's not going to comply with whatever you set. So it's just trying to get that balance right to make sure that you're not putting too much regulation in place, but you're putting enough there to actually provide the right protections for the users.
I would say the efforts of convergence between IFRS and national standards, or IFRS and US GAAP, paid off. A global adoption of a single set of accounting standards have reduced the cost of capital by minimizing differences in financial reporting.
I would say to the board, financial accounting will always remain the bottom line for a company where performance is going to be measured. But the financial accounting will always be a core interest to the investor community.
We should not be complacent about our successes achieved, but must be agile and keep our standards at high quality. It is my hope that we will continue to look after our stakeholders, engage with them, listen, reflect, and, where necessary, push back and explain. As long as we ensure that we have duly considered all relevant perspectives and views, we should be able to keep IFRS accounting standards in high regard.